But today you're going to know a little bit more about the man behind several of these products.
Had BigBasket, Bluestone, Home Lane, Portea Medical, Garlu, Hunger Box, Fresh Menu. My mother was a government servant. So I lost my father when I was 9 years old. I studied in a government school, a Tamil government school. I did try IIT but couldn't get through it. So I didn't want to be an engineer on the shop floor. So my second venture started. I ran it as CEO and then sold it to ICICI. Then started my third venture called Marketix, sold it to listed WNS. Then did my fourth serial venture, Tutor Vista, which we sold to Pearson.
Talk a little bit about your book.
How to create a brand, consumer brand from India for the US market. Why is Zomato being valued so much? Why is Paytm being valued so much? How do we utilize new age principles, platform principles, network effect? I mean, those are the moments that you really live for. Never bite the hand that feeds, never spit on the plate you eat from. Most of the time you feel, why the hell am I doing this?
Hi, everybody. Welcome to another episode of the Prime Venture Partners podcast. I have a superstar friend, business colleague, and just an amazing gentleman with us today, Ganesh. And if you don't know about Ganesh, that's okay, because you have certainly used products that he has started and services that he has launched. But today you're going to know a little bit more about the man behind several of these products. I'm just joking. I know everybody knows Ganesh, but Ganesh, welcome to our show. It's a pleasure and a privilege to have you here.
Thanks, Sanjay. Great meeting up again. And we go quite a while back, but happy to be here.
Thank you, Ganesh. So, look, Ganesh, every single name has got you as a part of it or behind it in some way or another, whether it's a BigBasket, whether it is a Bluestone, whether it is a home lane, all of these names that all of us have, used and continue to use on a frequent basis. But you've also had, of course, your early days, and then, of course, your days as a direct entrepreneur yourself, and subsequently co-creating companies with founders, being an angel investor, very prolific angel investor, and now recently, released your book, Mastering Disruption. Would love to cover some of this, and along the way hear some of your insights and some of your experiences. Our audience here are primarily entrepreneurs who would benefit a lot from your journey. So maybe we can start with the early days, your background, and what led to this amazing journey in entrepreneurship.
Yeah, so I'm an accidental entrepreneur, really, and I started back in 1990. So at that time, the entrepreneurial ecosystem, or the word entrepreneur or venture capital or risk capital, angel investor, all these do not exist. So obviously, it has to be accidental. So 1990 was the time when India was just liberalizing. Okay, right?
Can we talk a little bit about your younger days growing up, leading up to 1990?
Yeah, so I was born and brought up in Delhi. My mother was a government servant, so I stayed in government quarters. I lost my father when I was 9 years old. So my mother has, uh, brought me and my two sisters up. Studied in a government school, and very surprisingly, a Tamil government school in Delhi. And Delhi had this where the medium of instruction was Tamil till the fifth standard. So I could read, write Tamil, courtesy being despite being in Delhi because of the school. And then I went on to do engineering at Delhi College of Engineering, Delhi University. I did try IIT but couldn't get through it. And after that, worked for 1 year in Tata Motors, what was at that time called as Telco Jamshedpur, on the shop floor, because I was a mechanical engineer, and it is a natural job. Realized within the year that I'll never be a good mechanical engineer. And I was in Jamshedpur on the shop floor, which was at 45 degrees temperature. I said, I can't do it. Went on to do management from IIM Calcutta, because I didn't want to be an engineer on the shop floor. Then joined HCL. I was working directly with Shiv Nadar. I was his executive assistant, handling customer support role later, and then sales role later. And that was what got me into entrepreneurship.
Got it.
Okay.
Got it.
I always credit Shiv Nadar and HCL. At the time, HCL was a small company, about 20 crore company. And I was interviewed directly by Shiv Nadar and given a lot of responsibility. And that really taught me that I could take decisions as a 24-year-old and see that actual decisions worked. Okay, right? That gave me the confidence to start my first startup when there was no concept of first generation entrepreneurs. Uh, I had the other two jobs I had from IIM Calcutta was Unilever. At the time, it was called Hindustan Lever,
Eva.
and Citibank. And I always say that if I had joined either of those two jobs, then I would not have become an entrepreneur. That's why I say accidental entrepreneur. And HCL was a very, very great place to learn basics of entrepreneurship.
Wonderful, wonderful. So then 1990 came about, and you said India was just starting to
Yeah,
liberalize.
so I had worked 5 years in HCL, and India was just liberalizing at that time. The reason I said that was because it was still a license Raj. Very difficult to start businesses. There is no capital available. Only project finance was available. But we did not think about capital and all that stuff. Okay, right? While working in HCL, uh, handling computers, selling computers to corporate, one of the things that came up, aha moment that came up, was that at that time, the computer vendors used to maintain their own computers. The computers, even though they were IBM compatible at started, they were still proprietary
Hmm.
chipsets.
Hmm.
Okay. And Wipro used to maintain their computer, HCL used to maintain their computer, Epson used to maintain their printers and all that. So we saw an opportunity that corporates used to struggle. They used to typically have computers and printers from 10 different vendors. And whenever there was a problem, they had to call everybody because they don't know where the problem is. The
Yeah,
computer vendor will say it's not a my problem, it's a printer problem. Printer will say it's not a printer problem, it's a computer problem. Maybe the problem is in the cable that connected the two, but who supplied the cable, nobody knows. Okay, right? So that is where we saw the first opportunity that if we are able to provide a single point stop for entrepreneurship, sorry, for
for
computer maintenance,
mhm.
okay, right? It's a great opportunity to start a business. And so we started with the business as computer maintenance company. People used to call us computer mechanics. Used to charge an annual maintenance contract. Go to a corporate and say, "Give me upfront money. I'll take care of a computer for the next 1 year." So that is the genesis of the first venture. It was a bootstrapped venture.
Mhm.
Totally, we put in about 84,000 rupees across multiple uh, five of our founders,
Wonderful.
and started that, scaled it, and then sold it to iGate.
Got it. Got it. Got it. So this would have been mid 90s.
Yeah, so we started it in 1990. I ran it as co-founder and CEO till 98. Then I
Hmm.
moved to Bangalore, and we sold it in 2000 timeframe to iGate.
Got it. Got it. Got it. And then what came next? So because you've been a
So
serial entrepreneur, started multiple
yeah,
things.
so my journey was my family had moved to Bangalore because Meena was with number two in Microsoft, and Microsoft shifted the head office from Delhi to Bangalore. So for 1 year I was there. My daughter and Meena and my mother were here. So I had a compulsion to move to Bangalore, and so two of my co-founders started running IT&T. So I was looking at what to do next, and then the opportunity came. I was looking for a job or something to move to Bangalore, and the opportunity came with Bharti British Telecom. Bharti's had just taken over Wipro share in Wipro British Telecom.
Hmm.
That's why it was headquartered. Wipro British Telecom was
Got it.
headquartered in
Bangalore.
Bangalore. They were into VSAT services. Okay, right. So, satellite communication services using VSAT. Then I met coincidentally Sunil Bharti Mittal in one of the events there. He says, "Oh, you're from IT. You want to go to Bangalore? We have just acquired stake in." At the time, Airtel was only in North. They were not there. They were not running telecom
Hmm.
services here.
Hmm.
They said, "We have a small company there. We need somebody to handle it because we have just taken over. We don't know anything about IT. You know about IT. Why do you take over?" So I said, "Fine." It suited me. So I moved to Bangalore as CEO of Bharti British Telecom, which is great. For 2 years, I ran it, but the entrepreneurial bug will not stop. So after 1 year, I started selling Sunil Mittal, saying that I want to start, I want to start, I want to go. He says, "Hold on, hold on, hold on." So in 2 years, started in 2000, Customer Asset, what is now known as First Source,
First source, I
the
see. See.
very large BPO company, part of the Sanjeev Goenka group, and listed, and First Source as a email support company in 2000. But you know what happened in 2000? Dot-com boom and bust happened.
Correct.
But before we could even get our first few clients, fortunately, we had a money of $3 million. But dot-com bust happened, so we did not have a business model. We didn't have it. So we had money,
Clients
so
went
we
out of
discussed with
business.
the discussed with the investor, saying that what to do. He said, "What is?" Then we transitioned into a voice call center, which was not what we started. We wanted to provide asynchronous email support to dot-com companies in US from India, which was very simple. Running a real-time live voice call center from India in 2000, when we are talking
Wow.
about leased lines and
Yeah.
the dial-up connections and all of those was a big challenge. That is what we transitioned to. Fortunately, we survived the complete pivot thanks
Hmm.
to our investor and thanks to the fact that we had 3 million raised. Otherwise, nobody would have raised
Right. Right.
money.
Right.
Yeah. That's
Let's
how my
say
second venture started. I ran it as CEO and co-founder. Then sold it to ICICI, which is why it's called ICICI
ICICI one
OneSource.
source. Hmm.
Took it, they took it public, and now it's listed. Then started my third venture called Marketix, which is into high-end data analytics.
Hmm.
The concept of KPO and data analytics was not even there at that time. It was very similar to the BPO model, very similar to the customer asset first source model, but this was high-end data analytics support for Fortune 50 companies out of India. That also happens to be incidentally in Indiranagar. We took a residential apartment and hired PhDs or MStat people, statisticians, and MBAs from FMCG sector, put them together and did statistical modeling for Coke and Procter and Gamble. Now, of course, the industry is well known as KPO and other stuff. That was one of the first thing. Sold it to listed WNS because they wanted to get into the KPO space. Then
So
started my
that was with Shankar Marwada and
yeah,
team.
that was,
Yes.
yeah, you know Shankar very well. So Ramki, unfortunately, he passed away. Ramki, Shankar Marwada, and Vinay Mishra, three of the things. I had worked with them earlier of sorts in their previous venture called Intercept, and
Mm.
which then with that. So Marketix, I was the uh, chairman and the sole investor when we sold it to, till the time we sold it to WNS, never raised VC money. In customer asset, we did raise VC money, couple of rounds. Then did my fourth serial venture, Tutor Vista,
Right.
which
And
we
that was
sold
when
to,
I first met you,
yeah,
actually. Yeah.
yeah. Then which we sold to Pearson later, where we had teaching kids in the US from India, and we had a India edtech business. Again, the word edtech was not there at that time.
Right.
Sold it to Pearson. That's the four serial ventures and serial
So
entrepreneur
Tutor Vista
story.
was something different, though, in that you started it along with Srini, and your wife was also a
Yeah,
co-founder, right?
yeah,
So
yeah.
that was sort of the start of this team that did a variety of things together post that. So maybe you can talk a little bit about how that came together and
Yeah, so no, Srini was 2 years junior to me at IIM Calcutta, so I'd known him for all this while, and he had built Elance, what is known as, and
mhm,
then became Odesk and upgrade. He had come back to
India.
Bangalore from the Bay Area, just like you did. Okay, right? And lot of these.
That was the wave, yeah.
Yeah, that was a way where we used to call it B2B gang, Bay Area to Bangalore. Okay, right? So all these people moved, others Palm Meadows and Golden Enclave and places like this. Now,
Right,
of course,
right.
it's pretty common. Okay, right? And Shikhan Nadamani and all the teams,
Correct.
you,
Correct.
Shripati Acharya, all of you uh, came back. So Srini had come back. But with Meena, I had done one previous venture. So the four ventures I talked about, the two of them I did independently, and two of them with Meena as a co-founder.
I see.
So in customer asset, Meena was the co-founder. I was the co-founder and CEO, and that's an interesting story in itself because that was the time when I was CEO of Bharti British Telecom. I was working well. I did not intend to get into entrepreneurship at that time, but I was keen on it because I was doing exceedingly well. And Sunil Bharti Mittal was keen on me to become the CEO of the Mantra Online. That was the Bharti's internet service. Okay, they had just applied and got internet service. He wanted to merge the two. He said,
Hmm.
"You'll become see a combined entity. Don't go anywhere." Uh, okay, right. So that was the context. But Meena was working in Microsoft number two. She was teaching to start a business, and this entire customer asset opportunity idea came that because dot-com boom is happening, you require email support, and you can do email support from India. And that is a great new idea. Nobody had done it. Only IT Software development from India was there, support was not there. The concept of name BPO and all were not even heard of, or call centers. So she was, and I, because I had done entrepreneurship, I helped her to make a business plan, and was part of the brainstorming with another founder called Ajay Rao.
Uh-huh.
Okay, right? So I was trying to help them. I was part of the think tank and making it and all that. And that was also the time when my son was born. So there was a small baby at the house. So I mean, I needed help. And suddenly a call came from Bombay saying that, from E Ventures at that time, Neeraj Bhargav, you might be familiar with, saying that, why don't you come to Bombay and pitch to our this one? He said, we are not ready. He says, no, 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 it's okay. This idea is fine. We want to, we like the idea. We like the team. We want to come. The call did not come to me. It came to Ajay Rao through a common friend. So Ajay Rao. So Meena had said, going. Then they said, listen, you have worked on the model so much. Why don't you also come along,
Got co-opted.
come along with a meeting just as an advisor, mentor? Because I had legitimate, right? I'm Mina's husband, so it's nothing wrong. And I've been an entrepreneur. So I went there for the meeting. And so some questions were there in the meeting with the partners of eVentures. So they liked it. They asked some uh, question, and which they answered, and I answered, and all that stuff. Then suddenly Neeraj says, who is going to be the CEO of this venture? Okay. Now we are not prepared for the thing, because it's the first meeting,
Out of
first ever
syllabus
VC,
question. Yeah.
first ever VC, second VC in my life I have ever met. First VC they have met, first VC meeting that is there. We're going to see you. So Meena looked at Ajay Rao looked at Meena. We had another gentleman called Sanjeev Dalal, who was also first time we met during the Bombay trip. All of us, Meena and I met when he is also co-founder. He was a technical guy. So listen, look at how the team got formed. The only interaction with Sanjeev Dalal, the co-founder, was in the car journey to Fort Mumbai. But so, and he was the techie. He was not going to. So then they all looked at me, and Ajay Rao said, Ganesh is going to be the CEO. Okay, right. They said, done. Okay, right. They said, done, and we'll give you a term sheet. And we came out. I said, where did this come from? He says, no, I had to take a call because they were ready to fund. I could sense that they were willing to fund. They needed an answer to the question. Okay. I said, okay. I said, okay, okay, right. So that is, so Meena was, to be fair, Meena was a co-founder. Srini, while he knew him for 20 years, worked, he had come back, and the idea of Tutor Vista came in, with Srini and me brainstorming about how to create a brand, consumer brand from India for the US market. Now, today, you have so many SaaS companies and
Yeah.
others that is there, it's no longer surprise. At
No,
that
but
time,
still
go,
for a US consumer base,
yeah,
right? Yeah.
yeah. So for 2000, yeah. So in 2000, for example, okay, right, there are only IT services companies. They were all B2B. It's not for US consumer. Okay, right? Completely different game.
Correct.
HCL was there, Wipro was there, and Infosys was there. The only offshoring was B2B. There was no B2C that leverage Indian resources. And I was very keen to create a consumer brand. So that was one. Then education is an opportunity that came without, before any edtech or anything was known. So that's how it started. And it's been a nice partnership. After you sold it, we started Growth Story.
Wow. It's interesting because my introduction to you, because I had lived in the US for several years, came back, and when I was, I think, early days of my running MCheck is when I met you
Yeah.
in 2006. And so all of this is new to me also. So it's really amazing. But what's really interesting is also two, three things you touched upon, right? I mean, sometimes we tend to overthink things, at least nowadays, because we are sort of in this information age, and we have now ChatGPT and Perplexity also helping us or go into deep research mode and things like that. And yet some of the most astounding decisions and opportunities happen so much by serendipity and without overthinking some of these
No, no,
decisions,
absolutely.
and they worked out awesome.
No, absolutely. You're. I'm sure you would have seen it in your life too.
Of
I
course,
mean, you
yeah.
also entrepreneur, came back here, worked with the other, and this, and started a venture capital firm. There are very few cases of operators, actual operators starting, entrepreneurs starting venture capital firm, and yours is a great example. I often quote of the model working, wherein the entrepreneurs who have been there, done that before, and that actually shows. I mean, Prime Ventures is known as a very entrepreneur friendly organization because you have lived in that shows. That's not to snigger at the
Yeah, yeah, yeah.
others, but it's a very, very unique
It's okay,
perspective.
you can snigger at the others. We don't mind. This
No,
is our
never,
show.
never.
I'm
We
just
still have
kidding.
companies that are raising
No,
money. Never bite the
no, no,
hand that
no.
feeds. Never, and not in public forum like this. No, well, and never spit on the plate you eat from.
No,
Okay, right.
I think
I mean,
ultimately I've also
venture
learned.
capitalists are great. Okay, right. So let me.
I've also learned that I think everybody has to figure out what game they're good at and play that game, right? And I think there are certain things that many VC peers of mine do that we can never do. We're not just set up for it, and then there are probably things we can do that we can do best. And I think it's also an important thing to of not just founder market fit, but also founder investor fit that matters as well, because some founders may work very well with us and others may not. We may not be the right ones as well,
No,
right?
that is what I've admired. I've seen your journey because I remember when you just first started that
Yes,
Angel Prime.
I
It
know.
was supposed to be a small fund.
We
We
used
had
to
it.
live in the same community and
Yeah,
go out for
community.
evening
We
walks.
discussed. We went to walk. We discussed and all that. I like the idea of small fund. I mean, and you're not your fund is not in a hurry to invest. There is no FOMO with you, which is something which I really like. Also helps because the fund size is not large
Yeah,
and you're not running after deals. Okay, right?
yeah.
And one second thing, I've seen you support the companies. We are investors and we're co-investors in such
Yep,
companies.
yep.
I've seen your support during a good time and bad time. So which I think partly comes from being in
Having
the
been in the bad
entrepreneurship.
times as an
Yeah, the
entrepreneur.
bad time entrepreneurship. Most of the time we are in bad times.
This is what I tell people.
Statistically, yeah.
360 days of frustration and 5 days of glory is
Yeah.
all you get every year.
Yeah.
So look, that started sort of the next phase of your journey, right? Where you moved from being an entrepreneur with extraordinary outcomes all along, and of course you could have repeated that, but you sort of got into this model of saying, let me share the wealth in some ways, or I would say the wealth expertise for the most part, in a co-creation model with the whole growth story journey, right? So tell us about how that came about and why that versus say a venture capital model, and how did that? I mean, obviously we've had stellar hits along the way, and is there another parallel anywhere else, or is completely designed by the three of you, you, Meena, and Srini, and how did that come about, and why was that the right thing for India at the time?
Yeah, so I don't really know whether it's the right thing for India. So I had just turned 50 when we sold Tudor Vista to Pearson, and I had done four serial greenfield ventures, acted as the CEO in three of them. Marketing, I was not the CEO, I was the chairman and the sole
Mhm.
investor and only investor and advisor and all that. But three of the four ventures, greenfield, all of them were greenfield, all of them as founder and CEO, handling P&L. And at 50, having done four, I was feeling slightly jaded or tired. Okay, right? Too much of four exits. And also, I think rightly so, after four greenfield serial ventures and four successful exit, it's almost like a run. The probability of the next one, next one, or the next one was questionable. No, seriously, that is not the reason. But we said we want to do something different. I didn't want to. So two things. So I didn't want to be the CEO and run this after this. I want to see what next to do it. And I do this every 10 years. Okay, right? So every decade we look back and say, what do I want to do? I want to repeat the fifth one. I didn't want to do it. So that's one. So what are the options available? I mean, the option is venture capital, raising money. It's a 10-year commitment and
At
it's too
least.
much of a responsibility. Okay, right? I did not want to take on the responsibility of raising money from LPs and running a fund. It's too much of a responsibility. Fortunately, I had done some monetization, I had made money. I said, I don't want to do that. At the same time, I don't want to hang up my boot, be on the boards, be an angel investor, mentor, advisor, because there is no skin in the game. Okay, right? I mean, they'll take advice, but you're really, it's like being a board member or a
Yeah.
angel
Our
investor.
good friend Sanjay Anandram has another word for that.
Yeah.
Says there's mentor and then there's tormentor.
Yeah,
So,
mentor and tormentor. You could be mentor, tormentor, and all the stuff. There's nothing there. And at 50,
and I guess
it is
detrimenter would be
too
the third
early.
one.
Yeah, detrimental mentor. Yeah, okay, right. So at 50, it is too early to retire and non-only research. So wanted to do something more hands-on. So that is when we came up with this particular model of venture builder model, which is the growth story model. There are no really parallels there. We also did not do it to work, but because we are not raising money from any LP and all that, if it doesn't work, it's fine. It's not something which is there. It's not even not critical. So we said closest parallel was Rocket Internet
Hmm.
in Germany, Sambar Brothers. But their model was not exactly the same. There they control the full
Yeah.
thing. They gave a small equity to entrepreneurs. We said we will look at where the broad areas of next 10 years are, do some initial research or business plan, see if this is something we want to get into, and then find teams who can actually come and run it as co-founders. Okay, right? Each one will have a strong co-founder team and give them 50% equity
Hmm.
upfront, 50% with us, then raise money and dilute.
And the initial
And
capital also with you,
initial
probably.
capital to be able to do it. So the idea was if it works out, we'll go quickly and raise money from top venture capitalists. Reason is that each one will have a life of its own, will have its own governance, will have its own capital. It will not be seen as a family company, family
Hmm.
office company, and will be able to attract good talent with this, and will be able to build a company of its own. We never wanted to control it, so we obviously diluted immediately and do that. And if it doesn't work out, if you are not able to raise money, or if you think that it's not a good idea to raise money, then shut it down at some point of time. Okay,
Hmm.
right? We have shut down companies after 2 months or 3 months of starting. We have shut down companies after 6 years of funding it and starting because it didn't work out. It did work out. Some of them did have VC money, it didn't work out. Some of them did not have VC money. We funded it and do that stuff. So that is the way we envisioned it. I think it's been a good run. We have had multiple failures. We have also had BigBasket, Bluestone, Home Lane, Portea Medical, Verloop, Hunger Box, Fresh Menu, uh, all these companies coming out of this particular uh, model. And whether it's a right model, don't know. But for us, it has been satisfying because it has been not a full-fledged founder, CEO, entrepreneur, not a investor board member. Correct? We are the funder of the last resort. We still have companies which have shut down. The founders have moved on. We are handling the tax notices and we are handling all the
Right,
all
right,
the
right.
challenges that all of it is ours.
Got it. Got it. No, and I think you're being very humble when you say we've had some successes. They've been like extraordinary outcomes here with Big Basket and Home Lane
Thank you.
and
You are being kind as always. You're being more kind than right. Okay, right. But
no,
I'll
and look, I think in this business, most of the things won't work out, right? But the
yeah,
few that do
yeah.
are the ones that really, and one may put in the same effort or sometimes more effort
Yeah, yeah, effort
with
is,
the
I
others.
mean,
Yeah,
for every company, every entrepreneur, every company that fails, I don't think it is lack of effort. I mean,
right.
most of them work harder than I have ever worked and work. And it's amazing to see entrepreneurs, the kind of passion and determination they bring, including in our own companies. I mean, whether it's Big Basket or Bluestone or Home Lane or Portea Medical, through all the ups and downs. And you know this, Sanjay, it's ups and downs is a given.
Mm.
Correct?
Yeah, yeah.
We all go through huge
Downs are given, ups I'm not so sure.
yeah, ups are rare. And we go through huge euphoria and gloom and doom many times on the same day.
Yes,
Okay, right?
yes.
And come out of it.
The other day I was a guest on a podcast and they were asking me what's the day in the life of a venture capitalist. Said I wake up and I look at my phone. If there's good news, I'm really very unhappy because now there's only bad news coming later in the day.
Yeah,
But if some
yeah.
bad news has come in the morning, I say, okay, I've got something to look forward to. Maybe some good news
Good
will
news will
come.
come. Yeah.
And but look at I think even as a venture capitalist, I'm in an early stage, and our model is kind of very active engagement. So probably the closest parallel from a VC angle to what you built, but we're still sort of distanced and enough because for you, ultimately you have to handle all the legal notices and stuff like that. So, was there ever a time where you felt, wow, this is becoming too much, or is the pain is a lot more than perhaps the fun part here, or was the fun so amazing that it really didn't matter, and these are all smaller things?
No, no, again, statistically, most of the time you feel, why the hell am I doing this? Okay, right? It's with that. Okay, right? So, in terms of time, 80% of the time you'll be handling, fighting fires. It's like having 6 children. If you
Yes.
have 6 children, you can be guaranteed
Somebody's got a cold and
one of
somebody's
them
got
will
an upset
always be in,
stomach.
one of them always be in trouble. One of them will always be sick.
Mm.
Okay, you cannot have a peaceful day with 6 children. Okay, all the six will be out of trouble, doing great, and fully healthy. Not having a problem that requires you to attend every day is unlikely. Okay, we have over
And they're
10,
almost never looking after each other. So
10
you have
companies.
to.
Yeah, we have 10 companies. Yeah, it's a given. So number is you sign up for. But the other way to look at it is when you have 6 children, that's what you have signed up for.
Yeah.
Okay, right? You knew that. It's not that. It's not that. So it is there. What satisfies me more than the success of it is that these are huge pain points that you're trying to address. The fact that there are customers willing to buy your product, swear by it, thanking you for it,
Yep.
okay, gives a huge amount of satisfaction. Like take for example Portea Medical, the largest home healthcare company. The amount of, I'm sure you have experienced it, okay, right? So the amount of comments that we get that because of this service I'm able to live my life, I'm able to go to my office, I'm able to work, I'm able to do that. Okay, right? And this did not exist before. Okay, right? A branded caregiving
Yeah.
service
Yeah.
for this, which you can rely upon. That is so much satisfying. Or during the COVID or pandemic, BigBasket, for example. Okay, right? The way they stepped up to be
Exactly.
able to do it. I mean, those are the moments that you really live for. That is worthwhile to create a
Correct. No,
brand.
and as you said, you'd already achieved, you know, fairly strong financial success already. So getting into it, that was certainly not the objective here,
Yeah,
right? It was
yeah,
perhaps an outcome,
yeah.
but the real success was in both the journey as well as the value that people see in the product and at scale. I think that's, and it's sort of a gift that you have to be able to recreate this over and over again, and almost a responsibility that you have to make sure that these things happen, right? I mean, you could certainly have, put up your feet and, been at the golf
Yeah.
course.
Let me, Sanjay, let me ask you the reverse question. Okay, right? You had Angel Prime and Prime Venture Partners. You're doing this. Uh, venture capital business is a 10-year plus business at the minimum and a lot of responsibility. Till the
Yeah,
time the last money, last rupee is returned,
returned.
it's a pending responsibility. It's not like raising money in a company.
Yes.
Company you can shut down and say sorry and do stuff. That you can shut down. What motivates you to raise next fund? Why would you do it at this particular
Okay,
size?
my LPs are
Scale?
going to be listening to this, so I
Yeah,
don't
yeah,
know.
yeah.
Look, I think, Ganesh, for us, right, it's been an extraordinary ride, right? We wouldn't have seen a lot of this stuff. Of course, in this business, um, you will always have a wall of shame where, some company will come to you and you don't back them, and you look back later and say, what the heck did we miss? What were we thinking? But ultimately, our um, outcomes are only driven by the ones we do choose to back,
Correct. Yeah.
right? And so that is one. So I think I've always very early on made my peace with saying, look, it's not about, it's, if your logo makes it to my wall, then I have to do everything to because the others don't really matter, right, in some ways. And so when you do that, I think one of the things we have found, and I think you have also seen, entrepreneurship in India is a means of really just making life livable for the masses and making the world a better place. Is an outcome of it in the successful case that one does make, financial outcomes here, but it's really never the goal. And I think we have to enjoy the journey, right? And I can't think of a more exciting place and exciting journey right now, right? If I was to stop doing this as a profession, I would still want to be involved with this, right? I would still want to be meeting. I keep thinking about it. I'm really fortunate to have my partners as my best friends, our team around. It's a little bit of a in some ways a little bit of a family. I luckily managed to situate the office very close to my
Yeah.
house, so
And
I
your
don't have
partner's
Bangalore
house. Yeah,
commute,
yeah, yeah.
right? And so now I look at it and say, okay, this is exactly what I started telling people. This is my retirement. My retirement is exactly what I'm doing because I'm just having so much fun. It doesn't feel like work.
So the pressure of raising money for next 10 years plus and all that stuff,
I don't
despite your
think
having achieving
I don't
financial
think about
success,
that. That
and you're in
actually,
the same place,
I
right?
love it when LPs challenge us because those are the most stimulating conversations, right? It's
That
not the
makes you that
conversation
excite that gets
that
your
is more exciting, right? It's not the
adrenaline flowing.
conversation
Yeah.
say, okay, yeah, okay, fine, of course we're in for your next fund. No, and thankfully all of our LPs have actually put us through the ringer every single
Yeah.
time
Oh,
and
I'm sure
challenged
they do.
us
I'm
with
sure
all
they
the
do. It's
assumptions,
not easy to raise money
right?
for fund after fund, however successful you are, because they've got choices and they've got. One more question for you. I know. Why did you not come back and start another venture? Why did you
As an
start
entrepreneur.
as an entrepreneur? What,
Yeah.
what made you and your partnership? And others, what made you decide this? Because and I asked you that question even earlier because when I started Growth Story, you
Yes.
remember I
Yes.
came and
Yes.
took your advice. On this is what I want to do. I don't want to be busy. I don't want to be entrepreneur. I want to do a halfway venture builder model. Yeah. What
Yeah,
is your
I think
motivation?
so. My motivation on that was actually it's very hard to be an entrepreneur, and it's a very lonely journey. And I have the craziest amount of respect for entrepreneurs, right? And I just didn't see myself doing it again and again. Similar, approaching. I was approaching 50 when we started Prime, and then now a senior citizen, so I get 0.5% extra in the bank, on my FDs. I'm very proud of that, But I think for me, I think it's really, really tough. I think we are kind of vicariously living our entrepreneurship dreams. This is like, the crude analogy I'll give is sort of like grandparents versus parents. When the diaper
Very
needs
well
to be
said.
soiled,
Very
you
well
hand it over
said.
to the
Very
kid, but
well
you
said.
enjoy all the pleasure of it.
Absolutely. I think
In
very,
some
very,
ways,
very, very,
that's
very
sort of
valid. I
like
think
a,
vicariously living,
yeah.
having the touch and feel without some of the pressures of
Yes.
running it, it's a
And
great
we've
way to.
structured our model to be that way, right? By doing 4 to 5 new investments a year as a VC fund for early stage, that's actually a very concentrated
Yeah.
portfolio.
Yeah.
But it gives me time. Like I block Thursdays on my calendar to say this is my portfolio only day. I will not meet any new startups. I will not meet any outsiders. But it's my time. If I don't have meetings with the portfolio, I will go and harass the founders, and I will go ask them some questions. I'll sit down and do like product discussions, which have nothing to do with how the company is performing and things like that, right? So those things we have the freedom to do in our model. And I think that's the part that I enjoy the most, brainstorming with founders, and I hope they enjoy it as
And
well.
your next fund, you'll continue the same
We
philosophy
will
of
continue
being.
the same model, right? So our model remains the same. We've raised 100 million again, and we will do 4 to 5 new investments a year. Obviously, we now have a larger team, and so a lot of my time is also going in mentoring the youngsters and building this. I think the big thing for us here is how do we turn what we started off with into a sustainable institution at Prime, and
So you're institutionalizing the practices that you have learned so that instead of just being a fund by successful serial entrepreneurs, it becomes an institution on its own to
and part
carry.
of that is bringing in more serial entrepreneurs into the fund, right? And whether it is a new partner whom we just added, Bridge, who was the co-founder of Magic Pin, and even some of the next generation folks may not have necessarily been founders, but worked. Gaurav had worked with Home Lane, and
Yeah.
really understands early stage very well. And I think there's a lot more exposure. So the philosophy of working side by side with founders and being hand holding them through the tough times. I read somewhere, and I think Andreessen had quoted, you make your money from your winners, but you make your reputation on the
Reputation.
ones, I never use the word losers, but on the ones where you don't make your
Yeah.
money. And that's also very important. And very early on, we're trying to get people exposure into the board matters, right? So our investment team is not just hunting for new deals. It's after the investment happens, they're sitting alongside me saying, wait a minute, what did we miss? We thought the revenue was going to go like this, but it has actually not gone that way. And hopefully that's the feedback loop for picking, the next set of entrepreneurs as well. So that remains our model. And, as long as health supports it, I'm not thinking I would do anything else. I can't think of what else I would do. I'm sort of pretty narrow set of, hobbies and things like
Lovely,
that.
lovely to hear that. Yeah.
So that's been our journey. But speaking of hobbies, I've seen you on the squash court. I've seen you on the tennis court, or certainly. So what are some of your things that you do on the side, to stay, amazingly fit that you are?
So I have been playing tennis for the last 25 years,
Mm-hmm.
and when the COVID stuck, I started learning bridge. So now I'm addicted to online bridge,
Mm.
right? So that's something that I do. But I play tennis every day. And after I turned 60, which is a couple of years back, I said I'm gonna start learning something new every year. Okay, right? COVID helped in learning bridge, so I started playing badminton. Okay,
Oh,
right?
lovely.
So now I need to pick up one more sport this year. So I regularly play tennis and badminton. That keeps me fit. In addition to, I'm fanatic about intermittent fasting and a low carb diet, which really has helped me lose 14 kgs, stay fit, and be able to have all the energy for my. So also, after 60, I said I need to give back. in certain ways because I do every 10 year I do this. At that time when I turned 50 years old, Tutor Vista to Pearson, I said growth story, venture builder model. So at 60, I said I want to get into academics.
Mm.
I want to teach, formally teach. So I teach one course at IIM Bangalore. I designed a course called New Age Business Models and a couple of courses at Indian School of Business, Hyderabad and Mohali. So almost one third of my time goes into teaching. Okay,
Wow.
right. Wherein I design the course, I offer the course. It's a full credit course in teaching. Other than that, I have my tennis and this. Meena and I also have our family foundation called the Bahar Foundation, where I spend some time and Meena spends a lot more time, where we are trying to use some of the things that we have learned over the last 40 years in giving back. So
Mm.
what we do is a program called Community Healthcare Entrepreneurs, wherein we said, can we make tribal woman in rural area self-sustaining entrepreneur by giving her the ability to provide healthcare services in the remote areas.
Wow.
So, with point of care devices, with market connects, with training, the local tribal woman is able to do basic healthcare testing and diagnostics in her community, right? And charge a bit for it and earn money. So we fund the full thing through the foundation for the first 1 year, the viability gap funding. At the end of 1 year, she should be an entrepreneur, self-sustaining, earning anything between 3,000 to 6,000 rupees per month, which is substantial in a tribal area,
Mm-hmm.
which is
Mm-hmm.
25 to
Of course.
40% of that monthly income. And that is it. We have done this. Initial cohorts have been very successful. We have done this in the Bastar area, Naxal invested
Wow.
area in Chhattisgarh. It has worked out well. So that takes a bit of time. So tennis, Bahar, teaching, and of course, we have our companies which are at various stages of monetization. The Big Basket, of course, I no longer sit on the board of Big Basket. We still have some shares. Tata's own two-thirds of Big Basket and they control the board. So I have no role to play other than selling my shares whenever they make a good offer, good offer, or they take it to IPO. Bluestone, we just filed the
Well, yeah,
DRHP,
yeah.
got the SEBI approval, and hopefully it will do that. I'm not on the board, but we have independent directors on the board, and hopefully will monetize. We have Home Lane, which is just acquired Design Cafe, and I'm sit on the board and likely to take it to public in the next 12 to 18 months. Portea Medical, where we have Vaibhav Tiwari as the CEO running it. I am a board member. Do that. So those responsibilities take the balance two-thirds of the time.
I heard the bell ringing in the puja room just as you were talking about taking all these companies to,
Yeah,
their
yeah, very good omen.
next
Very good
milestone. So
omen.
that's a
Yeah,
great omen.
yeah,
Before we close, we'll talk a little bit about your book,
yeah.
right? You recently published a book on New Age
Business
business
model. Yeah.
models, which is also the class that you're teaching.
Yeah, so this book, the need for this book came about because a lot of queries came from potential entrepreneurs, wannabe entrepreneurs, students, and even general public saying that how are these new age business model working? Why is Zomato being valued so much? Why is Paytm being valued so much? One was they were stunned at the valuation when the people are struggling to raise money.
Mm.
Okay, right? What makes companies new age companies get valued so much? One. Two, from a retail investor, because people have invested in the new age IPOs, many of them have lost money, there has been challenges. And also they said, how do we really evaluate? Because traditionally, for a retail investor, evaluating on PE ratios, earnings per
Correct.
share is quite well known.
Mm.
But when you're loss making, there is no PE ratio or no
Mhm.
earnings per share. How do you evaluate it? So this question came up, and general interest on saying what drives this and do that. And many traditional businessmen running traditional business say that how do we utilize new age principles, platform principles, network effect, virality? How do we use those in our business
Mhm. Mhm.
to scale, not to be have our
Left
lunch
behind.
eaten,
Mhm.
not to be left behind, not to be disrupted, all this. So I found a common thread across this, right? So, and of course, this is also the topic which I was teaching at IIM Bangalore. So that is how this book came up. It's meant for a general reader, not just for entrepreneur, anybody who is fascinated by all the new age business model, fintech or creator economy, digital transformation, disruption, all of this. So that's how it came. Penguin was kind enough to publish it, and happy to say first few weeks it was number one bestseller on Amazon in its
Wonderful.
category. It has just gone for a reprint, which I'm very pleased about. So like we also talk about vanity metrics in the book. One of my vanity metrics is, does it go for a reprint in a short period of time? So that's a vanity metric.
That's
And
powerful.
as is being number one on Amazon, but I must wanted to brag about it here. So
No,
it's
absolutely. That's hardly a vanity metric. That is a earned metric by the book itself, right? By the review. So congratulations on that. And one last thing to close. I know we talked a little earlier. This whole new exciting world of AI that has come about. What are you doing about it? Is this another wave that you're going to jump into? And if so, any early thoughts on where you see the opportunity or what you're trying to figure out here?
frankly, Sanjay, I'm a bald old man. Okay, right? I'm trying to get to
The
grips.
bald part I can verify, but the old
Uh,
man part hardly.
Thank you. You're again being kind then, right? But the real this one is, I'm really trying to learn. There is so much happening. Okay, right? Every month there is something new that is happening, new release that's being, forget the release of technology,
Yeah.
just the use case. Latest now is agentic AI
Hmm.
and how workflows are getting disrupted. Forget about investing or doing. I'm trying to get my grips about learning about it. Okay, right? It simply is fascinating because l- almost like internet, or at olden times that steam engine, or transformed, or the invention of the wheel
Yep. Yep.
transformed. This is completely transformative and unlimited potential to be able to do it. I mean, I thought I had good understanding of LLM. Okay, right. I was clear about where it was going, and it's fine. I even wrote a chapter for the book, for the next edition of the book.
Hmm.
Okay. But within 2 months, now we are talking about how workflows are getting completely disrupted
Yeah.
using agentic AI. And you must have seen this in fintech also, right? I
Yeah.
mean, I
Absolutely.
mean, because you are expert on fintech. When we talk to banks, we are talking about earlier about banking as a service, BaaS, embedded finance, banking as a service, which was great. We were just scratching the surface. Adoption was less single digit percentage of banking as a service, all of that stuff. Suddenly, now you're talking about agentic BaaS,
Hmm. Hmm.
where you're talking about agents replacing full workflows.
Yeah. Yeah.
Okay, and doing it. And the same thing is with SaaS software. SaaS has had a great run. Now you're saying, why do I need a SaaS software? Why can't I use autonomous AI
Components. Yeah.
agents to be able to do? So, short answer, I think this is going to be big transformative, great opportunity for entrepreneurs. And any case, whether you are a marketer, whatever you're doing, unless you are using generative AI and AI agents, you cannot be competitive. It is
Yeah.
like saying, if you're not going to use automation, if you're not going to use internet, you cannot be competitive. It's a fact. You can't, if you don't have a website, if you're not sending online, you can't be. You need to be able to provide that.
So it's both a survival and an opportunity, is what you're
Both
saying to
survival
people.
and a
Yeah.
great opportunity. For me personally, I think I'm still trying to learn how to decipher it. And I look forward to discussions with people like you who are actually evaluating. I'm sure you are,
No, we are
the inflow
also.
of AI business models you're seeing must be
Yeah.
phenomenal, right?
Yeah. No, absolutely. I think it's true. And I think one of the things I have been trying to do is actually just use all the products that come out. Right. I actually, and to give you an example of what was never possible that is suddenly likely to be possible. I never wrote code in my life.
Yeah,
Right.
same
I
here.
could
Yeah.
never, and then I always correct myself. I could never get Hello World to compile. I was just so bad at it. Right. But today, with tools like Lovable and stuff like that, you can get up in the morning and in 30 minutes, you can whack out a nice looking, professional looking, at least mock up. And, if you connect Superbase at the back end, you've got a database also. It may never be production
Have you
grade.
tried Lovable?
Yes, I've done several things with it over the last
So
two,
give me an
three
example.
weeks.
What did you do? What is the first thing that you tried on Lovable and
So
did
the
that?
first thing I tried was a health tracker, right? And not to say that I'm in great health or anything, but just tracking all the activities around a health tracker, and you basically just give it an instruction, saying design a health tracker for me, and it says, okay, I'll look at Healthify, I'll look at this app, I'll look at that app, I'll take what I think are the best thing. And the first version it gives you itself is something that looks like a product that's been built, right, by a professional, and in
All this done by
5
AI.
seconds, in 30 seconds, right? And
Wow.
then you interact with this, okay, can you add this, can you subtract this? And so this whole idea of one size fits one, which is my new mantra, is, I think, there used to be a restaurant in New York that said we give such personalized care. It's a one size fits one strategy. I think that's where the world is going. So to your point earlier about agentic flows and stuff like that, how you and I interact with something might be very, very different. The functionality at the end might be, yes, we press a button and buy the air ticket. But I want to have the experience of talking to my travel agent. You may like the e-commerce experience. You may only want this category of flights, etc. And once there's enough personalization on that, this is the K Ganesh experience. That is the Sanjay Swamy experience. And there might be a different one for someone else. And I think we are going to move into this extraordinary new world where it's going to be one size fits one, and how I do things, how you do things might be really tuned to ourselves, but with the same functionality and the same business process, right? So it is, sky is the limit in terms of what's possible. There's also the so I look at it as, at least in the financial services and certainly in healthcare, there is the core product itself that one is talking about, which can use AI a lot, and that could be lending algorithms, that could be, diagnostic algorithms, for example, and so on. Those, I think, are very sensitive, right? And there one has to be very, very careful, because explainability and all these other issues will arise. But all the scaffolding around it, of how you interact with the customer, how you interact in, post care, customer service, etc., that can be, attacked immediately. So to me, the first order opportunity is what I call the scaffolding around the business, which is very, very, domain specific and customer specific and use case specific. And then there's the core business itself, which may or may not come immediately. But there also we're starting to see some extraordinary innovation. So it's definitely an opportunity to be both excited and scared at the same time. And that's always the perfect mantra for me for,
For your new fund, will that be a focus area? I mean, obviously, leveraging Gen AI is a given,
yeah.
but I'm talking about Gen AI native business models.
Yeah. So I think, it obviously is a core part of everything we're going to do. I think everything
Yeah,
everybody is
yeah,
going to
yeah,
do.
yeah.
But I actually think that what does it enable that wasn't previously possible is
Hmm.
also a very exciting thing to think about. So there are things of, for example, edge AI models. We recently funded a company, off the shelf cameras and AI at the edge, to do uh, industrial automation to the extent of like fault detection, right? It's already being used by cement manufacturers, already being used by
So predictive.
it is no, it's actually looking at the product and saying, okay, this is a faulty product, right?
Oh,
So if you
acha.
look at
Okay,
a
okay, okay,
scooter
okay,
assembly
okay. Yeah,
line near
yeah.
Bangalore, there's one that manufactures a scooter every 90 seconds, right? So a false positive is very expensive because it stops the manufacturing line. A false negative is even more expensive because now you have a recall problem, right? And but things are possible now at scale and at speed at the edge. So one thing after the other, I think every use case, but anything which has an IoT element to it, or a regulatory element to it, or a phygital element to it, combined with the digital piece, I feel very comfortable about, because there are enough inherent moats that get built. Anything which is pure software only, I'm scratching my head saying, do I have the guts to bet on how this is going to proceed over the next 5 years? It's a hard call.
No, that's a very, very interesting perspective. You combine robotics, IoT,
Yep.
sensors, analog, digital devices with software and with Gen AI. It looks like a more comprehensive model and something I, as a old, bald old person, can relate to
Yes.
much better. But pure LLM or pure software is something beyond.
I mean, of course, we will have several of those also in our portfolio, but it is quite scary, right? To try to say, if you're going to build a generational company, a lasting company is going to be around 10 years from now. Who knows what the world is going to look 10 weeks from now?
Very true. Very true.
So, between term sheet and SHA, the model may have
Yeah.
changed. But that's, I think, also where backing the right entrepreneurs who have the right mindset and are not wedded to the solution but are wedded to the problem,
Yeah.
I think is very important, right? And if they have that insane desire to solve this problem and not claiming that they have got the perfect solution, I think those are the instincts that we look for. Anyway,
Great.
Ganesh, look, we can go on and on and on, and I would like to, and we'll probably come back and do part two of this soon, perhaps with Meena as well. But thank you so much both for your time today, as well as for the extraordinary contributions you've made, both in the for-profit world as well as on the giving back world, and the inspiration you are for everyone. Thank you.
Thank you very much. Thank you for being so kind. Thank you.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.